Hey, welcome everyone. Tom Alonjin here, CEO Park Avenue Trading. For those of you that know me, I want to wish you a good hello. For those of you that don't, I'm a retired chief Forex dealer for several international banks in New York. Unfortunately, I'm old and I got over 35 years experience trading this stuff. Get yourself a cup of coffee or a beverage of your choice. Today I'm going to address the question of what are the benefits of trading Forex versus stocks or other financial instruments. And, I grew up on Forex, so I'm going to be completely biased with the answer to this question. I honestly believe that trading foreign exchange is probably the quickest way to obtain wealth. Because the reason I say that is that if you compare Forex trading, it's a very, and I'm going to get into the benefits of it, but one of the main benefits that I'm going to re-go over is that it's a low cost of entry into the marketplace. You could take $50,000, put it into a trading account. If you know what you're doing, you can exponentially increase that capital over the course of the year, as opposed to, like, say, for instance, you were going to go and buy a franchise. A lot of people that I talk to that are looking to get out of the daily grind, they're like, oh, I'm going to buy a Subway. I want to buy a McDonald's. I want to buy, some type of Jimmy John sandwich shop. But the whole problem with that is that it's just not the cost of the franchise itself. If you're going to try to get into a McDonald's, over like $2.5 million, $3 million in real estate assets just to have a McDonald's. So with foreign exchange or really any other type of trading, you don't really need that much of a capital expenditure. However, you could see returns right away in trading daily. With a business, you're not going to see those returns daily. It's going to take some time for you to recoup your initial investment. You got to pay your franchise fees and all that other stuff. And you don't really start to see profits until after 5 years. So for me, Forex trading, just that alone, is an incredible benefit. But the benefits of Forex are that, the spot Forex market, which is a 2-day delivery, is the most liquid market in the world. One of the main benefits of it versus stocks and other financial instruments is that since it is the largest in the world with over 6.6 trillion traded daily on average, it offers traders unparalleled liquidity. With this unparalleled liquidity, there's a great advantage to all different trading styles. Okay. And the Forex market has great trending capabilities. It's one of the markets that really, once it begins trending, the trends could last, sometimes for months, even into years. And I'll give you a quick example. When I was trading the dollar versus the Deutschmark way back when, the dollar was in a downtrend, and it was in a downtrend for 5 years. Any type of rally, significant rally, if you had good levels to sell, you could get into that trend, that train, and hold on to that trade for 5 years and make a tremendous amount of money. It went down like 30 pfennig over the course of 3 years. So anyway, Forex has a great trending capability. So that's one of the benefits. The market, once it begins trending, it trends and it stays in a trend for quite a while. And it makes sense because it's really the economics behind it. Now, I'm not a fundamentalist, but I have to be a moron to dismiss fundamentals, because I believe technical trading, which is what I am, and fundamental trading go hand in hand. So, but the fundamentals take a long time to work through the marketplace. And, if you're just going to trade fundamentals, it's very difficult to try to put all the pieces of news together and make any type of short-term trading decision on it. If you're a long-term trader, and everybody says long-term trading when the trade doesn't go in their direction. Oh, that's a long-term trade. The market's done. But as soon as the market goes in their direction, it becomes, a short-term trade. But anyway, so fundamentalists versus technical. I won't, I'm a technician. I would have to be a fool to not look at fundamentals, but I digress. So anyway, let's get on to what this is about. So what's traded on the foreign exchange currency, the market itself? It's currencies. So, and Forex is always traded in pairs. It's one currency against another. So, for example, in it's like the US dollar yen pair, okay, it's the dollar versus the Japanese yen. There's the bid and the offer, or the bid and the ask spread. Now, by you buying the dollar, by taking the offer and buying the dollar, okay, you're basically simultaneously going short the yen. So you could look at the trade in two different ways. You could look at the trade as I'm being long the dollar, or I'm actually being, short the yen. Okay, so that basically, through the bid and offer spread, you are getting short or long simultaneously, because it is in currency pairs. Now, technically with stocks, the technical difference with stocks is that in order for you to short a stock, you have to actually ask the broker to borrow the stock first and then sell the stock, go short the stock. So then basically you can't technically do what's naked short selling, because that involves selling shares that do not exist. Okay, and it's illegal. The legal way to short sell is to first borrow the shares before selling and opening a short position. Naked short selling, or selling short, is basically the process of selling shares of that securities that have not been confirmed to exist. That's naked short selling. You have to have the stock in your portfolio before you go and sell it. You got to ask your broker to borrow it. Okay. Now, in the United States, naked short selling is totally illegal, and it's an SEC violation. Ding, 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 ding. You do not want SEC violations. You do not want these people, you don't want to invite them into your house. You don't, okay? Because, if your files are not in order, and, you, God forbid, you don't want to deal with the government in your house, okay? So that's one of the positive benefits versus a negative. Now, if any of you are newbies, in the description below for the video, I will have like a Forex 101 guide. It's a newbie guide. It explains bid and offer, and it doesn't get into details like how to calculate cross rates or anything. I have a video in my courses on how to do that, and we'll get to that at another time. All right, so the most traded pairs are called the majors, okay, and they're traded against the US dollar. The major pairs consist of the euro, the sterling, the yen, the Swiss franc. Now, when the dollar is not involved in the equation, in other words, it's the sterling versus the yen, sterling versus the New Zealand, it's the euro versus sterling, okay? It's basically called a cross trade. Now, I don't understand why they don't consider those majors, because really most European traders and myself, when I worked in the bank, we would do cross trading more than we do straight dollar trading. Now, of course, we traded, sterling mark at the time, which is if you remember the George Soros debacle, with how he attacked sterling and made $1 billion off of it. It really wasn't even George Soros. It was Stanley Druckenmiller, his head trader, that actually came up with the idea. But I digress again. So basically, I don't understand why they don't call the crosses major, but they don't. The majors are the euro, the sterling, the yen, the Swiss. Okay. Now, originally, the spot Forex market was available only to banks and hedge funds and insurance companies like AIG. But now with the advent of, the computer, and they have retail Forex brokers that connect to probably the EBS system, which is electronic brokering system, and they shade the prices. They add a little bit here and there in order for them to make money. That's how they basically fund themselves, to give you a demo account that you could practice with, and all the tools that you could possibly imagine. I mean, there are some tools on demo accounts in 35 years of trading, I never even heard of. And I mean, a little clue is that don't bog yourself down with so many technical analysis tools. Your trading riches don't come from the tools themselves. Technical analysis is important, but there are many other factors that will make you successful in Forex, not just technical indicators or technical analysis itself, okay? So just don't bog yourself down with it. The market's open 24 hours a day, 5 days a week. Starts around 5 p.m. Eastern Standard Time on a Sunday, and it closes at 5 p.m. Eastern Standard Time on a Friday. Now, the market gives retail traders an incredible business opportunity since it's open 24 hours a day. And it's very desirable for those that can only trade on a part-time basis, because maybe they have other business to attend to during the day. Maybe they have a job, a job. Okay. So therefore, the market being open 24 hours a day, 5 days a week, gives the trader ample time to basically deploy their trading strategy when they see an opportunity in the morning, noon, or night, whenever it occurs. Okay. Now, you should have a trading strategy that has a positive edge, obviously, and you should also have a trading strategy that you trust to give you several ample opportunities to trade during the day, so you don't get that fear of missing out. Okay, fear of missing out is very, very bad for traders. It causes them to do things spur of the moment without any real thought behind it, and that could be the death of a trading account. So we don't want any fear of missing out. Leverage, okay, a small margin requirement is what we were talking about in the beginning, how Forex is, an incredible ability to build wealth and see the wealth get built month basis, as opposed to doing franchise or something, or investing in some other type of business. Leverage gives the trader the ability to make extraordinary profits, and at the same time keeping risk low, if the trader understands money management. Very important. You got to understand how to manage the money. Everything should be basically based off of an R value, which is, if I'm risking, say, 60 pips on this trade, that's 1 R value. So therefore, I want a multiple of R back. I'd like 1.5 to 3 R back on the trade. Obviously, Paul Tudor Jones said it best, because they basically want 5 R. You want 5 R on a trade. It's hard to get 5 R on a trade, okay? But you want 5 R, unless you're going for 10 pips, okay? Then you get 50 pips. That's 5 R. But, let's say, for instance, we're dealing with 60 pips or 70 pips or even 100 pips is your 1 R. Well, you want 500 pips back. That's pretty tough to get, okay? But what he said was, if he was trading at 5 R, 5 times what his risk was, he could be trading at 20% and still making money. He'd say, I could be a complete idiot and still make money. So that's the idea of R value. You want multiples of R back. All right. Low capital barriers. Forex offers the ability to open an account with as little as $500. Some places even smaller. Would I suggest this? If you're going to trade that small of an account, okay, you need to be trading minis, all right? And, you got to put everything in perspective. If you are able to make, over the course of a month, $100 with a $500 investment, that's incredible. That's great. That's a 20% rate of return for yourself in a month. So you got to put everything in perspective of what you got and how much you're making based off of what you have. You can't say, I put $500 in here and I haven't made my $1 million yet. Okay, that's fantasy. All right, so just keep in mind everything that is in perspective. Everything is in relationship to what you have. Okay, generally low transaction costs. Now, here's the thing. You're in control of this. You're starting a business. So basically, what you want to do is, transaction costs are very, very important. You want to pay the lowest transaction costs as possible, but also you want the bid offer spread to be good. Okay, in other words, if you're going to pay, the lowest transaction cost, yet the bid offer spread in euro dollar is 3 pips always, well, then you're really not paying the lowest transaction costs, because you're going to pay it through the spread too. So now, if you have to find basically a happy medium with this. Okay, so you got to find a reputable broker Not some guy that's out in the Seychelles Islands somewhere that's saying, oh, give me, your $10,000, and I'll give you 700 to 1 leverage, no brokerage, and the tightest spreads that are out there. Ding, ding, ding. That guy's going to steal your money. You want a reputable broker. You need to go to a broker that basically, and I'm not going to name any brokers, anything, but, you need to find good ones. Like in the States, you got Forex.com. You got many others, but, like Gain Capital. You got Dukas Copy, which is for overseas. You got plenty of good ones to choose from. Just don't fall for the, oh, this guy is going to give me the lowest spreads plus offer me tremendous amount of leverage. Okay, generally leverage itself, or is a double-edged sword. In the States, you cannot get more than 50 to 1 leverage. That's another positive benefit, is basically you have the small amount that you put in the account, and you have leverage. Some firms, overseas, I believe Dukas Copy offers 200 to 1. Here in the States, you're just getting 50 to 1. So I'm going backwards a little bit, talking about the leverage that I talked about before. I didn't mention it. So there you have what I consider to be the benefits of Forex trading. Now, if any of you are interested, I have a website. I'd invite you to go to www.parkavenuetrading.com. It'll be in the link below where you can go. I got a free gift if you sign up for the email. I also have some blog posts that will give you some ideas. And in the description, I'm going to give you a link to the Forex 101 guide. Remember, enjoy the party, but dance near the door. Cheers.